please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Flavor of the day is clearly the IT sector, and in that, the stock which is on our radar is Mindtree. It's gained close to about 3% This is a CNBC TV18 exclusive. I caught up with Rostow Ravanan, the MD and CEO of Mindtree, at their 2018 analyst meet, which was held in Mumbai yesterday, where he spoke about stronger growth in FY19, his target margin range, the troubled client in BFSI, and how the win ratio of the company has actually improved in the last 2 years, amongst many other topics. I started out by asking him whether this run rate of $300 million of deal wins that the company's enjoyed in the last 2 quarters are sustainable going ahead. Listen in.
The whole team is focused on engaging with customers, helping close deals as quickly as possible. We are also very pleasantly surprised by the strong resilience of the demand environment. So things are going well for us. But again, like I said, don't want to comment on the specific deal wins number. Part of it is, again, like I said, I don't want to give guidance.
But it's sustainable, these large deal wins.
Part of it is also the fact that deal wins are also binary, right? I mean, in last quarter, some deals did get closed. Now, I can't predict how many will get closed in this quarter, but underlying momentum is strong, the demand environment is strong, and Mindtree's pipeline is growing and our win ratios are also growing. So that's what gives us confidence for growth for this year and even over the next few years.
So any numbers on the pipeline and win ratios, how they would compare with the prior quarters?
We don't give the pipeline numbers externally, but on win ratios, for example, in 2016, our win ratios were about 22-23%. So if I participated in $100 worth of deals, I would win about 22-23. Now it's probably become 33-34. So it's about a 10% improvement in the win ratios over the last 2 years.
And pipeline, how much higher is it this year compared to, say, last year?
Pipeline is almost, I would say, significantly higher, almost like multiples of what the pipeline used to be 2 years back, and much larger than what the pipeline used to be even last year this time.
All right. Let me come to the margin business. I know there is a big rupee tailwind, but many of the large IT companies are trading with margins of over 20%. Some of the mid-cap companies are at 13-15%. Where does Mindtree want to be?
We are conscious that our margins are below our comfort level right now. We got hurt by a few things, including the acquired entities, and the integration had its own challenges, and we are now slowly working through all of those issues right now. So for me and for the management team, improving margins is a very big priority. I would like to leave the currency effect out of this for the time being, because that is outside our control. But X of currency on an operational basis, huge effort by the management team to improve profitability. It's below our comfort level, like I said. So trying to get it back, is a big priority.
So what is Mindtree's comfort level or potential in terms of margins?
So our comfort level was in the previous cycle when the rupee was about 62-63 kind of a range. Mindtree was at 17-18% operating profit or EBITDA level. Trying to get back to that kind of margins is the focus. Now, maybe it will take me more than a year to get there, but that's the priority for the leadership team. So over the next few quarters, we expect that bottom line growth will be faster than top line growth.
Okay, but now the rupee is actually at 70, right? So shouldn't that take your like-to-like margins closer to 20% or maybe even higher?
If it does, it does. So like I said, I'm not guiding or I'm not factoring in currency. If the rupee depreciates, then any benefit we get will flow through. If the rupee appreciates, then any impact we have will also flow through. So we are keeping currency aside for a second. On an operational basis, improving margins is what the team is focused on.
Okay. Big risk when it comes to Mindtree is the concentration risk. Is your growth X of the top line in line with the industry? Can it grow in line with the industry, or will it be lower?
Again, like I said, don't want to comment with the rest of the industry. 2016-17, we had a peculiar situation where multiple of our large clients had issues in their own business. It's got nothing to do with Mindtree, neither from a delivery point of view or a relationship point of view, but peculiar factors affecting their own business then impacted them, and therefore it impacted us. I think we are largely behind those issues as of now, barring one customer. So therefore, the customers that are in our top 10 or top 20 list today, very high confidence that we can generate more growth out of them, and that's what we are working on.
Some more color. You said barring one customer. What exactly are you referring to? Which
Amongst our current large customers, one customer is still going through some business challenges in terms of, if I look at some of their recent reported numbers, management changes, etc. One customer is still, I would say, is still not completely settled down, but all the others have settled down, and some which have not likely to grow have dropped out. The ones that are likely to grow have come in.
But has the stress level increased at this particular one customer?
It's remained the same, so it has not stabilized as yet, so therefore it's difficult to predict the line or no line of sight into the short-term future with that customer. But the remaining, like I said, if I were to look at my top 10, 9 out of top 10 are a lot more confident with the ones that we are left with as of today. So that's the effort to mine those customers and get more growth.
Where do you foresee digital, say, in 2 years or 3 years from now?
I think it will continue to accelerate because, like you pointed out, our own pipeline plus what we are seeing from customer feedback as well, they are getting into much larger, more complex, more transformative programs. Our win ratios within that are probably even higher than the Mindtree win ratio that I spoke about there. So I think it will maintain its above Mindtree growth rate even for the next few years.
Okay, and BFSI, has it improved?
Not at the moment. I think it's still extremely choppy. The troubled customer that I spoke about is one of our BFSI relationships there. But even if you leave that client-specific issue aside, we are not seeing BFSI do as much of transformative or innovation-led work, grow the business, digital kind of work within our portfolio at the moment. That's what we are waiting and watching for there. Our BFSI portfolio seems to be still predominantly focused around efficiency reduction, sort of improvement, or regulatory kind of spends. We're not seeing that much of transformative digital initiatives right now.